If you are NRI or going to become one and are confused how to manage your banking and receipts, you are in the right spot. In this video, I'll walk you through different types of bank account options available to NRI, their peculiar features, pros and cons, and I'll guide you which one is suitable for which purpose. So let's dive right in. Hi everyone, I'm Onam Aggarwal, your NRI guide, and this is the second video in my NRI series. Today, I'm going to simplify banking for all the NRIs. Basically, all NRIs have two types of income sources. Foreign earnings, that is the income you earn abroad, and earnings from India, that is Indian earnings. And the banking system is devised to separate the two sources into two boxes. One box is for domestic earnings, which contains the non-resident ordinary account. And the second box is for foreign earnings, which has further two compartments, NR external account and foreign currency non-resident account. So the domestic earnings go to the NRO account and the foreign earnings go either to NRI or FCNR account. Now in box number 1, NRO account is just the NRI version of the savings account which you were using in India before moving abroad. In box number 2, first is the NRI account. It is a savings account to deposit your foreign earnings in whichever currency. It is tax-free, gives you flexibility of full repatriation. You may deposit your foreign earnings in this account for sending money home to your near and dear ones, saving foreign earnings in Indian savings accounts to be used for emergency and even for investing in Indian assets. And in the same box number 2, second is the FCNR account, which unlike the NRO and NRE account is a deposit account, just like a FD account, for your foreign earnings in foreign currency, allowing deposits for 1 to 5 years. These are just the basics of these accounts. So let's have a closer look at each of these accounts based on different parameters. Starting with the first point, type of deposit. As I discussed above, while Indian earnings must necessarily be deposited into NRO account, your foreign earnings may be deposited into NRE or FCNR account. The second prime consideration is repatriation. After all, it's important to know how much money you can take back home and what are the restrictions. Now in box number 2, there's absolutely no repatriation limit and there's full flexibility in both NRE and FCNR account. But in NRO account, there's a restriction of 1 million USD on your non-current income. This means that your income from interest, dividend, rent, pension, etc. can be freely repatriated. But income from sale of assets, investments, and mutual funds is subject to the limit of 1 million USD. This provision is created so that the assets of India are not subject to flowing abroad. The third important factor is account operation. Students going abroad often have this question that can I open this account jointly with my parents or relatives? It's understandable, It becomes easier when someone in India is managing your account while you are concentrating on your job or your studies abroad. Well, the answer is very clear and simple. The NRO account can be opened jointly with the resident, whereas since the box number 2 contains foreign source income, it must be held jointly only with an NRI. Resident is strictly not allowed to be a joint holder in box number 2. Now, a very pertinent question asked by students and professionals going abroad is that what should I do now? Well, it's very easy since you know your residential status as per FEMA is going to be that of a non-resident. It is prudent to convert or redesignate all your resident bank accounts where you are primary account holder to an NRO account so as to avoid any violation of law. It is a simple process which can be completed over the bank counter, email or courier. Just a few documents and you're done. The fourth important factor is taxability. Now the box number 2 is very attractive in this parameter because the interest earned on NRE and FCNR account is completely tax-free. The principal as well as the interest is not subject to any taxation at any point of time. However, since the box number 1 contains Indian earnings, the Indian government gets you here and the interest on this account is subject to taxation. But, you may avail the benefits of DTA like the US DTAA offers reduced tax of 15% on interest income. One last concern of NRIs may be exchange rate fluctuation risk. Well, only FCNR saves you from this risk because this account is denominated in dollars, and that is why it has emerged as a very attractive deposit avenue since interest rates abroad are generally lower. The NRO and NRE accounts are rupee dominated and they expose you to the risk. So concluding all of these, NRE and FCNR accounts offer great flexibility for repatriation and they are perfect for those who want easy access to their money. NRO accounts are a bit more restrictive, but it's a necessary evil. If you have income in India, assets in India, you need this account for managing your income sources. So friends, that's about it. A precise yet effective scoop on NRI banking. Choose the right account to manage the finances effectively. Smash that like button. Share this video with your fellow NRI or friends going abroad or looking for investment in India. Hit the subscribe button for more straight shooting advice on pressing NRI issues. And if you got some questions, drop them in the comments below. I'm here to help you. Until next time, keep smiling and let's make NRI issues very simple.